All right, so here is a panel that I think you all are probably very anxious to hear from because it's about investing in startups, and I'm sure there are many out here who are looking for investment. So every startup begins with a founder with an idea. How does it mature into an actual business? Venture capitalists have to sort through pitches every day, and I can say that as a journalist, I sort through those same pitches often, to find the gems that will become successful companies. We'll speak to a trio of investors to find out what they look for in early stage startups. Jyoti Bansal, CEO and co-founder of Harness, Rudina Seseri, founder and managing partner of Glasswing Ventures, and Chelcie Taylor, investor of Notable Capital, will join us on stage with moderator and editor Ingrid London. Please welcome them.
Hey, everybody. Hi, guys.
Hello.
So yeah, we have a panel here on startup investing, and you may be some startups who want investment, but this won't be where you get to pitch these great people. But we are going to ask you guys some questions about the state of the market, and you come from three pretty different angles into the space. So I hope that will provide for contrasting things to say. So I think I just want to get started with something very basic, which is, if we talk about from startup to seed, the question is, what is it that you guys are looking for right now? I would love to ask you that question and to be answered in any way that you want to see it answered. Maybe we can just start with you, Jyoti.
Sure, I'll start. You know, my background, I'm a VC, but I'm also an operator. I've started 3 companies myself. I sold 1 company. I run 2 companies. So I have both hats. Like, what do you pitch as founders, and then as a VC, what do you look for? And to me, it's like what we look for right now is no different than what we used to look 10 years ago, or what VCs used to look 10 years ago. And I from my perspective, I look at very simple things. Is it like are the founders unique and differentiated, and they have some strength in what they're pitching about in solving that problem? Second is, are they bold and ambitious about solving a big problem and build something big? And are they going to be would they have the faith and the patience to go through hard times? And then third is really about the market and the problem. And does it make sense in a broad level? Because in the seed stage, things change all the time. So I look at in the broad problem makes sense or not before it will go through pivots and all. That's what I look for.
Okay. Rudina, you have obviously a very different background. You don't come from having founded a startup yourself, but let's hear what you are looking at. And we're talking here about early stage investing, where we're talking about maybe companies that have never raised any money before. What is it that you look for? Is there like a theme or something that you think of first when you evaluate?
One correction, I did found Glasswing Ventures, and
while technical yes, that's true. Sorry, VC founder, you are still an entrepreneur.
I was going to say that while technical founders have a demo, I have myself. Here I am. Here's my track record. A little harder, but
no, you're right.
But and then I share that because I think the journey of entrepreneurship is one that's fulfilling and requires a lot of resilience. So what I look for, in addition to people make or break you every time of the day, so it starts and it ends with the founders and the management teams that these founders build, is really for the focus areas at Glasswing Ventures, which is the application of AI and frontier tech to enterprise and security. We are looking for founders who are building companies that are leveraging true AI, that are truly AI native. And what I mean by the true AI or AI native is, no thin wrappers. It is our view that there isn't a big moat there. We're really looking for you to own your stack minus the infrastructure layer. Partially open source or proprietary, we're almost indifferent to that, but having a moat around the tech, having a moat around the data access, and here's the kicker, which I think is incredibly important, solving a problem that cannot be addressed simply by SaaS. We do AI is hard, we can talk about it, but it's not monolithic, it's multitudes of neural nets and different types of architectures. So it's actually, what problem are you solving that has a TAM that previously was unaddressable?
So tech is figured very strongly. Okay, Chelcie, and you, please.
Yeah, so I think what's interesting about my perspective is at Notable, which I should also say we recently rebranded from GGV Capital, which I think folks are a little bit more familiar with. But at Notable, we're multi-stage. So a lot of folks often, when they're thinking about raising an early round, they'll obviously go to an early stage investor, which I think is amazing. We love our early stage partners. Obviously, Rudina and others here today are amazing kind of early stage pre-seed and seed investors. But from our perspective as a multi-stage fund, like we've seen businesses go from 0 to 2 to 5 to 10 to 100 million of ARR. So as a result, when I'm assessing a seed stage company, I'm thinking, okay, how do I pattern match what I've seen actually work at a scalable company to what I'm seeing happen today? And so that to me is kind of the calculus that I'm trying to always find. I'd also argue that, I spend a lot of my time looking at AI applications. I spend a lot of time in the application layer. And it's really unknown right now, and I'm sure we'll dive into that. But as a result, I'm also looking for founders who have a level of intellectual honesty. So I think founders who say, like, look, I don't have the answers, because transparently, if you ask an investor if they have the answers and they tell you that they do, they're probably lying. Like, I want a founder to have that level of discussion and decorum with me, and so that's actually a really positive signal. A founder who's like, this is what I think is working today, and hypothetically it won't, but I want you as my multi-stage investor to help guide me through that process.
Yeah, I mean, it's quite interesting that two of you have mentioned AI pretty prominently. I mean, obviously it's a massive focus right now. I can imagine that a lot of founders out there think they need to kind of land on a few of these currently very, very kind of hip, popular, buzzy, hype-laden technologies to catch the eye of an investor. And, we've seen a lot of numbers out there, which pretty much bear that out. Investors are looking for hot deals in AI. They want the next open AI, et cetera. How much is that leading you, Jyoti? Are you trying to find things that fit the current sort of trends, or are you trying to find things that are almost off-trend, so that it's a kind of more interesting space?
My take is a little bit different. I don't necessarily look for AI investments, and
yeah, you didn't mention it.
Our venture firm, Unusual, we don't necessarily look at it. But I asked our team just like maybe 2 months ago, what percentage of our pitches are AI pitches? And I thought maybe it would be like 60%, 70%, something like that. The answer was 100%. So pretty much everything is an AI pitch, because we do have something going on in the industry that AI is a technology that can solve so many problems in a much better way. So when we look at investing, it's not about, everything is an AI pitch, so it's not really about AI from our perspective. We look at what problem are you going to solve. So someone says, I'm going to redefine, how CRM is done. That makes sense, probably, right? So using AI, but they have to convince us how they would do it. Someone says, I'm going to redefine how CAD/CAM software is done using AI. Yes, maybe it makes sense. Could probably be redefined. The AI does have an opportunity there. So now you have to convince us on how are you going to do it? Do you have the expertise? Do you have the willpower? Do you have the to go and win as you do that? But we look at really the problem. And AI is the current buzzy trend and tool. AI is, I don't think is the end of everything around
right.
it.
I mean, let me turn that around. If you're not seeing AI as part of a pitch, are you downgrading it a little?
No, absolutely not. AI, I think, permeates probably every pitch, as Jyoti said. It's really hard to find a company that's pitching me today that isn't trying to have some AI angle.
Astounding.
So that's probably not a hot take. I think everyone probably knows that. However, in no way am I only looking at AI application in AI companies. I think if anything, if there's a founder who can convince me that they have a really novel idea and they can build this company without leveraging AI, I'd be actually quite intrigued to hear how they're planning to do that and why they think that that approach is superior to utilizing some of the best kind of, best-in-class advancements that we're seeing in the AI ML ecosystem. So no, I wouldn't say I downgrade them. I think I just, I don't see it as often.
Were you going to say something, Jyoti?
No, I was saying, at this point, to me seems like AI has to be part of almost every product. You can't build software without AI. If you are building software without using AI, your software is not going to be competitive. So it doesn't matter you're a seed stage startup or a late stage startup or a very big company. You're a bank and you're building software, you still have to incorporate AI into how you engage with your consumers. So AI has to become, so if someone who doesn't believe in that AI has to be part of their software or their technology to solve some problem in a better way, most likely they're going to lose out competitively.
May I
Yes, please, Rudina, speak up.
So it's interesting to me because I've been investing, sort of the whole firm is staked on frontier tech and AI, and we started in 2016 to invest in AI before it's popular. I completely agree, and if I may take it in a direction of, there is a fundamental difference though, not all AI companies are created equal. We have companies that are AI enabled, meaning the user interface, user experience, you're making calls to OpenAI, Anthropic, whatnot. Everyone has to have that. I think as consumers or as business users, we will never interact with technology again in the same way that we did in the past. This human-like interaction enabled by the LLMs and the breakthroughs is here to stay. In my humble opinion, that a moat does not constitute. Fundamentally, to have a moat, you have to have a lot more in your architecture. You have to know what facets, of AI. If you're going for, vision related, are you leveraging CNNs? Are you doing them appropriately? I mean, we have this tendency to use AI as one block, and AI is hundreds and hundreds and hundreds of combinations of MLs and techniques. So I'm a little bit more scrutinizing. Yes, everything is AI enabled, but what is truly native so that we have an advantage on the architectural side, on the algorithmic side, and then most importantly on the data. If you're going to build an AI company, all four of us could potentially get to the same place with different approaches to AI. The question is, what are you training your algorithms on to have a true edge?
Yeah, it's fairly funny because once in London, I was speaking with an investor who's doing a bunch of medical technology investing, and I was like, I didn't know you knew anything about this. He's like, oh no, I don't. And I thought, how is he doing this? So what is he? Is he investing in anything serious or vaporware? Do you ever get that feeling with AI?
The one thing that I see with AI is like a thin layer on top of the AI APIs, like a thin layer on top of OpenAI, for example. And you can build apps, and there are gaps in the models that are coming from call it the model providers that you can fill with building some software, building some app. And I see startup pitches where these are the gaps in the OpenAI models, and we can build a company around that. And to me, the question is is it really sustainable business? So one of the things that we have started to use almost as a formula is to ask them a new model coming out from OpenAI, for example, does that scare you or does that excite you? Does that make your product better, or does that make your product less competitive now because the gap is filled? And it's interesting. So many times, it's people are scared of the new model coming out of an OpenAI or Anthropic or someone. And then if you're building an app on top of that, how are you gonna? There is no moat. But if a new model excites you because it's gonna create your product so much better and your experience so much better and the problem you're solving so much better, you're in a good place as a company.
Okay, I'm just going to shift to the direction of this a little because I don't want to get too much about AI.
Yeah.
Okay, so for the startups out there, very curious, how are you guys sourcing deals? And we're talking here about the early deals. So do you go to conferences like this and kind of go out and speak to startups looking for a new company? Do you take a lot of inbound? Where are you guys finding your deals these days? Start any one of you, but I want to hear each of you answer this.
I'm happy to take this one first.
Yeah.
So I maybe even taking a step back, we, like most venture capital firms, try to be very thesis driven. So we, there's a couple different approaches of how to be a successful VC. Our stance is that generalist firms are amazing and there have been amazing outcomes, but we have chosen an approach of being very thematic focused. And so we have kind of three main sectors, one of which is application layer software, which is one of the teams that I kind of lead investments in. So with that said, I'm narrowing the ecosystem to some extent, so it helps me from a sourcing mechanism. But I'd say it's twofold. There's one, absolutely, I take inbound. we're constantly thinking about ways in which we can get more kind of scale and optimize our ability to meet the best founders. So one approach that we've done that I think is maybe interesting for this group is that we've really honed in on our community and network kind of strategy. So in practice, that means we have a VP of engineering community. Those are kind of be best-in-class AI engineers that we gather on a semi-regular basis, and these are folks that we not only hope maybe one day leave their existing organization and want to build something, but simultaneously, we're also going to be working with them to say like, hey, test this new dev tool for us. Tell us what you think. Like, does this work? Is this interesting? Like, what would you not
How
want
much
about
are you
this?
guys testing and then going from that to actually investing? From testing to investing.
So it's actually,
new panel.
for us, like, I think it's a competitive advantage. Like, we do it quite often. And I actually wonder.
Do you tend to invest in everything you bother to test?
No, I mean,
No.
it's still going to be the venture numbers that unfortunately we say no to most companies, even if we think they're really promising. But we have, in the last year, I think done 2 or 3 deals that came through kind of us testing with our user group. And like, just for a little bit of context, it's not just engineering. We have a community around cyber. We have a community around data. We have a new community around women in AI. Like, these are all of our methods to now like stay as close to the ground as we can. Because in my opinion, particularly in such a competitive, again, I'm coming from a venture perspective. It's like a very competitive venture landscape. Founders, you obviously have even a more competitive landscape. Like, I have to constantly be up to date, and these are the people on the ground for me.
Yeah.
So,
Rudina.
yep, I'll build on that. And it's actually very similar. We are not multi-stage. We're pre-seed and seed, so we tend to be first capital in. So as I say, 2 founders who are maybe showered or have pulled a few all-nighters, we love you. We love them. So for us, you know, sourcing is like pieces of a puzzle. There is no one perfect way to source. It comes from things. We do incubations from time to time, especially with repeat founders. A lot of folks out of academia, whether it's Stanford, Berkeley, MIT, Harvard, what have you. We have what we call our trust networks, which are also similar to yours. They tend to be, our advisors are contractually exclusive to Glasswing, and they cover sort of C-level execs that are buying software, repeat founders. So there is that ecosystem for both diligencing and bringing customers during due diligence. You know, how helpful would it be to a founder? We've done it plenty, where as we're doing diligence, before we even get to a term sheet, we've brought a solid lead or multiple to them. One other area for us that's promising is one of my partners, Cleda Martiro, leads the effort around eating our own dog food. I'm going to say AI one more time and then I'll be quiet. We've built our own early AI engine in actually trying to identify founders. It's incredibly hard to do, and I'll be full of it if I said we've got it fully figured, because it's very sparse data, and you fundamentally have to imagine that 2 or 3 founders tomorrow will wake up and start a company. But we're getting some really interesting signals. So that's, I think of it as one more input.
Yeah, I've seen a number of firms are using platforms that they've built in-house to do that sort of thing. It's quite interesting. Jyoti, what about you? I mean, you've got a reputation as a founder and very successful exit. You're sort of a bit of a, makes you into a hero investor in a way. Do you just get inbound based on that? I'm sure you get tons of LinkedIns.
Definitely, you know, the inbound is a big part of it. Like, you know, people reach out. You know, we at Unusual Ventures, our primary focus is to help the founders in the very early stage. So our entire model is built around like how we help founders going from 0 to 1. How do we help them sales, marketing, product market fit, messaging, all kind of things, right? So there's a bit of the word of mouth and the network on, like, you know, founders that we have helped before. So we get the, you know, the word of mouth and the inbounds a lot, you know, through that kind of reputation that we have as a firm. We also run an academy 2 times a year. So that's a big part of you know, how we find you know, a lot of founders is like, you know, about we pick like 15 to 20 companies from the academy where people apply, different founders apply, early stage companies. Most of the time these are you know, ideation stage, like idea stage. You know, you're just starting out a company, you apply for us, and we will select you, and we kind of go through it, and that becomes a, you know, sort of a flow of deals for us.
Rudina, did you want to add something?
I wanted to add something because I think it's a very important point that Jyoti is making, which is which VCs and which firms are you partnering with on the operations side. One thing that has really helped us at Glasswing is basically, even though we're early stage, for every function in a technology company, we have a founder who has, someone who has been a founder or operator or has built that function. And I think that 360, whether you're helping them get to 0 to $1 million, the go-to-market, how do you get your first sort of lead generation and demand engine going, those are key facets, and they become reinforcing as you help the founders and they tell other founders.
Okay. So listen, I have a few questions I wanted to ask you all, individual, kind of based on your own specific backgrounds, which hopefully will be interesting to the audience too. So Jyoti, you obviously you had App Dynamics, very specific company which you sold to Cisco for nearly $4 billion, and that was, I think, in 2018 or something. 17. At a time when I think it was a lot of money. It's still a lot of money now, but back then it was even, you know, the whole unicorn idea was even more novel than it is now. And you started that company, you know, many years before then. You know, you yourself were one of these people looking for seed funding once. How would you say the market has changed since those days to today? Has seed become an easier sell or harder one?
Well, the definition of seed has changed, you know, since then. The seed used to be like $1 million or $2 million of seed. Now seed will be 5, 6, 7, 8 million, maybe more in some cases. So that has changed, but I think fundamentally what the investors are looking for hasn't changed. When I was looking as a founder the first time, when I started my first company, I was engineer turned founder, pitching to a lot of VCs. And I had like 25, 30 rejections. And, so I eventually found like, okay, what do people really want as investors when I was in the founder shoes? And it turned out to be like, you have to be able to pitch that your idea, if it's successful, most ideas are not successful. If it's successful, it could be a big successful company, like $1 billion exit. Because that's how the VCs look at, right? VCs, all the math works as in that if something is successful, it goes big. So you have to prove that. You have to prove some kind of traction of something, like, something that this is real, whatever you're pitching has some social validation or market validation, customer validation, some traction, some kind. And the third is you have to sell yourself. Like as founder, like why invest in you? Like, if it's a good idea and good problem to solve, there'll be 20 other startups solving this, so why you? Like why would you win out of the 20? And I look like if you prove those three things, you get funding. So when I started to get my funding, like which is, how investors operate, it's kind of always, I still find it very funny. I was pitching and I got all the rejections and no one was ready that,
How many
you're not ready.
rejections did you get before you got a okay?
I think about 25 or so. But when I got my first one, within a week I got like 6 offers. Like, so which is, but because you kind of crack like, okay, what do people really need? What people want to hear? So, and I do think like when I was a founder, that's what it was needed. And once I made those three things very clear, and I had a lot of offers coming in and all.
Yeah.
So, and I realized like even as an investor, I'm really kind of looking at the same things. The thing that I've added to it is more around the grit and perseverance. Like, are the founders ambitious, and do they have the grit to go through the hard times? Because every company goes through hard times, and like, are they going to give up? Because in the seed stage, as a VC, I look at the number one risk I have is like, even if all those three things are there, we invest in the company, and something goes wrong in a year or two, which will happen. Would they give up or would they go through it?
Yeah.
So, yeah.
Right. Chelcie, you have a very interesting background, which I won't go into massive detail, but basically you came to VC kind of not as an early career, not even through being at a tech startup, which is very fascinating. Do you think that you come to it with a fresh pair of eyes that maybe career VCs don't have? What advantage is that giving you in how you look? Which is to say nothing about other reasons why you come from outside of the box, being a person of color, being a woman, being, tell us.
Absolutely. So not to bore the whole crowd with my background, but I started my career on the operating side, particularly in the media and entertainment ecosystem. So worked in corporate development, worked in strategy and ops and biz dev roles at companies like CBS, Viacom, TV networks. So yes, Ingrid's right. As you probably are thinking, like, that is an odd entry point into venture capital. But I actually think that it does present me with a few opportunities in that, for one, when I was in my corp dev role at Viacom, I was looking really at all of our competitors at the time were Netflix, Hulu, Disney Plus, and being like, what is their tech stack and why are we still stuck in 2000, 1990, like all of our solutions were just so antiquated. So a lot of the work that I was doing there, which was obviously from a constituent's point of view of like, how do we just keep up and ensure that our top line is actually growing, to actually now sitting in my seat as a venture capitalist saying like, how can I work with the best in class founders? How can I back really big ideas and help them realize large outcomes? So in short, I think there's so many parallels and one which you can draw between kind of those two worlds, but also, while I've not necessarily kind of built or been an entrepreneur directly, like my two kind of co-panelists, I have operated within very large organizations. I've seen kind of what works, what happens when bureaucracy gets involved, and you're an organization that needs kind of revitalization. And I think I'm constantly helping my companies, because I do focus on enterprise, think about, okay, so now we're moving from that 10 to 20 million of ARR. How do we make sure we still have innovation, product velocity? Like those are always top of mind, and frankly, just helpful reminders to me, because I came from a place, so unfortunately, a lot of businesses just weren't keeping pace with kind of modern approaches.
Cool. Rudina, I love that your background is, you had a totally different to these two as well. Long time working through Harvard and its entrepreneurship program, which I have two questions about that. So first one.
I work for free, number one. No, go ahead.
Oh my God, wow.
Give back to the ecosystem.
Wow. But yeah, because you were sort of an EIR there as well yourself.
For 9 years before becoming executive fellow or some.
Yes.
Names mean nothing, but go
so,
ahead.
First of all, do you think that Harvard founded that in response to the fact that they completely missed investing in Facebook? They was, one of the biggest tech companies of our time was founded in a dorm room in Harvard, and they didn't even get a cut, like even a tiny cut of that business ever.
I don't think so.
Okay.
Harvard and these big institutions might as well be governments. I mean, their endowments are so very big. No, I think they, especially I'm largely affiliated with the Harvard Business School, but it's that need of entrepreneurship, and entrepreneurship cuts across tech and far beyond to basically tap in the next generation of wealth creators, market transformers, company makers. So, but sure, I'll take the blame.
No.
Joking.
No, I think you were the solution. That's what I meant.
You heard it here first.
Yeah. So the other thing I was going to ask you about is, I think you're based out of the Boston area, which is so fascinating because it's just full of, it's just the most interesting ecosystem as an academic landscape. How much are you tapping into that versus finding founders from other backgrounds, or is that an ecosystem that you? I hate to use the word ecosystem. I was told never use the word ecosystem, but anyway, you know what I mean. Just the landscape of really interesting people and intellectual community.
A ton of talent out of academia, both in terms of entrepreneurs in the traditional sense, but also a lot of innovation from breakthroughs. I mean, breakthroughs, and I wouldn't just even go to Boston. If you'll allow me, I'll go a little bit north, all the way to Canada and Toronto, even though we're based in Boston. I mean, all of what we're talking about around LLMs and Gen AI, for better or worse, neither here nor Boston, out of University of Toronto. Same with neural nets. So from a depth of academic talent, a ton of it, and we're deeply embedded. And what's beautiful about this day and age where we're sort of hybrid in person and remote is that now teams are more than ever, sort of cross country. So they might start at Stanford or they might start at MIT, or the two founders are across country and they come together. But that is an incredibly rich ecosystem, particularly around AI talent.
Which is not to say that if you're not coming straight out of a university that you don't have opportunities. There are tons and tons out there. Which brings me to something that might be my last question, which is about bootstrapping. So I've been out and about Disrupt, and really there are a lot of founders here, tons of whom have not raised a penny from outside. They're all trying to bootstrap, partly because they may not be able to raise money. They haven't managed to get that check, open a door. How much kind of value do you place on a company that's done bootstrapping before they ever raise any money? Is that something you'd like to see, or that you respect, or you think, oh, you haven't been able to raise money? You know, what's your view on bootstrap, Jyoti?
Well, I do respect and admire bootstrapping. If what that shows is, like, you know, there is a grit, there is a determination, there is a scrappiness about the founders, that they got started with something. You know, I don't like founders who are like just completely waiting. Like they're like, you know, I always look for, like, if you have an idea, if you're passionate about it, don't wait. Start with something. And when you start, you go and start looking for capital. You know, you start with, so that to me is a good signal that they are starting and they are more action oriented, not just waiting. And so that's what I like. At the same time, like, sometimes you do see on the flip side founders who are very against venture capital. And I normally advise them, like, you know, yes, there are bad stories about venture capital, but not all venture capitalists are bad. I've been on the other side as founders as well. You know, pick the right investors, pick the right founders who can work with you, who can partner with you. You will need help. It will get competitive. You know, it's like if your problem is interesting, you have to compete. And other companies that are your competitors will raise more capital, and then they will have an advantage, structural advantage over you. So don't underestimate the value that capital will give you to compete and win in the market. So, and you know, you have to have the dialogue with the founders there.
Okay, Chelcie.
Yeah, so we have backed many bootstrap companies in the past. One of which that comes to mind is actually a company of ours called Slice. They're vertical software for independent pizzerias. That company was bootstrapped for several years before they took on venture capital. And now it is a very large, I will not say proprietary information, a very large business that we think has a real shot of, like, you know, taking down big pizza, which in our case is the Domino's. That entrepreneur had grit, perseverance, as Jyoti said, and frankly, actually, the capital that they infused accelerated the business. So he got it to a point, he did some product market kind of experimentation while he was bootstrapping, and then the second we infused capital, the company started to really grow on venture scale. So the short answer is, like, we never, you know, bootstrapping a company is great. We think it's a positive for sure, but we also want founders to understand, like, with the right partner, growth can really accelerate. And for us, the right partner is someone who has obviously incentives aligned, has networks, ways to help you scale.
I love take down big pizza. Okay, Rudina, do you have anything to say on bootstrapping? And then
I think very similar, just it shows resilience and determination in the early days. Just don't do it at the expense of growth, because, you know, in creating a moat and differentiation, capital can play a role.
Yeah. Well, thank you so much, you guys. You've been very interesting. Thanks so much for listening. Good luck with everybody.
Thank you.